YouTube. Got a lot of people in here already this morning. Ready for some Friday trading. Sound is low. 1 second. I forgot to move my mic. That would help. How about now? Test 1 2. Sweet. All right, there we go. How's everybody doing? Now it's too high. Man, I can't win. Good morning. Marine Blue 990, I see you. Good morning. Tony, thanks. Appreciate that. Slayer, what's up? Hopefully you guys got good audio now. My mic was set off down to the side. Sometimes I move it off my desk when I'm not on stream. All right, how's everybody's week going? Get into the analysis here and stuff that I'm watching, but how's everybody's week going? I'm doing well. It's been a good week. It's been like 4 figures every day this week. So it's been a good week. Just staying very, very patient, waiting for key levels, and then just taking a base hit. Not trying to hold things too long in these conditions. It's crazy. It seems like the market could never trend more than a day directionally, and then we went on that absolute rip on ES and NQ from, what is that, the end of March for like 13, 14, 15 days nonstop straight up. And then we went straight from that to just dead sideways. So it's tough. You got to be very, very in tune with what the market's doing. For me, it's best basically like since February. Some people have been asking me on Instagram and stuff. I keep getting DMs like, what's working right now? To be honest with you guys, what I've found that's working the best is not trading inside value areas, not getting chopped up in middles, and then also just staying very patient for key levels. We don't really have much like supply and demand, support and resistance type levels. I come up with key levels on the order flow, prior day highs and lows, and stay very patient for those. Wait for really strong confirmations and then just take a base hit. A base hit for me with order flow though can still be like 2, 3, 4R, sometimes even more. Also, ES has been pretty grindy a lot of the time lately, and I've been taking a lot more trades on NQ lately. I do trade both. I've traded both for a long time. I'm primarily an S&P trader, but the NASDAQ has just been showing me better opportunities lately. And so I've taken a lot more trades on the NASDAQ on NQ futures lately. Let me know in the chat, what do you guys trade? Are you guys primarily ES traders, NQ traders, gold, Forex, whatever? I trade options, I trade futures. I've never touched Forex, but let me know in the chat what you guys are using. Quickly, while we talk about it, huge discounts right now on Apex. Make sure you check out the discount code for Alpha Capital. There's a lot of good stuff, good discounts and everything like that. With those, make sure you check them out. They support our channel and help bring this content to you guys for free every day on the live streams here. NQ, gold, QQQ, NQ and ES, gold futures, trade Forex and indices. Interesting, NQ. Does anyone in here just trade ES or just trade NQ? Trade SPY options? Yeah, even when I trade options, I do trade options as well. Cash account. Even when I do trade options, I still do the majority of my analysis on the futures. Just SPY. Somebody said they just trade SPY. Just trade ES. Interesting, interesting. Does anyone here trade both, like all the time? So for me, I do trade both, but it comes down to a lot of either relative strength or weakness, right? As a short-term trader, it often behoove you to trade the leading instrument. It often works best. This is a concept that I got from the Studies in Tape Reading, the OG of order flow trading, Richard Wyckoff, one of my favorites. Talk about it all the time. But they talk in that book about trading the leading instrument, especially as a short-term trader. There are general exceptions, but when I choose one versus the other, ES or NQ, it's generally because of either one, it just makes more sense with the direction that I'm trading, relative strength or weakness, higher probability of working out that way, or just the key level that it was at, the confirmations, etc. If I just have better level, better confirmations, etc. on one versus the other, then I'll just go with that. But what I have found lately is it's been a lot easier to trade base hits on NQ and still capture really high R multiples. Yep, happy Friday, guys. All right, let me switch over my screen here. So this is Bookmap. This is my one of my favorite order flow analysis tools. If you guys aren't familiar with it, I have ES here and Q here on this tab. A little bit different view on the two of them. Let me turn that brightness down. But we'll go through analysis here. I'm pulling up my volume profile. So here's another like tip for you guys. Normally, I like to look at day volume profiles for a lot of my analysis. And let me show you what this looks like. So I typically look at like a 15 or a 30-minute chart on ES or NQ. After I've done like my macro technical analysis on charts, and then get into technical analysis, a little bit more view of the actual market auction where buyers and sellers are, then I look at volume profiles. So when the market goes into kind of a sideways range, especially like this on a multi-day basis, it's just there's volume everywhere. There's volume everywhere. The market is just up and down in this multi-day range, right? So there's not a super clear picture for me here. We're near all-time highs. So just the fact that we're near and holding near all-time highs is already bullish. And we see relative strength still on NQ. I've taken longs on NQ a lot this week because the relative strength has just been clearer to read on NQ. It's been easy to take base hit longs on NQ because the relative strength has just been there. It's just been easy to read. So we'll talk through ES analysis first here this morning, guys, and then we'll go over to NQ, what I'm watching on both. So does that sound good to you guys? Let me know in the chat. I'll cover both. I'll trade both, but we'll see. So we see this, there's just a lot of visual noise here. If I filter out and I just look at, all right, where's the most volume, the point of controls? There's point of control, there's point of control, there's point of control, there's point of control. So majority of the point of controls where the most volume has been built is like in this range right here, which makes sense. It's like kind of the overall middle here. It's shifted up a little bit. It's shifted up a little bit, but just generally within that. So the kind of extremes are here and here at these lows where all the wicks are. But I'll show you another way that I look at this. When we have a multi-day range like this, I like to go over to a 4-hour chart that doesn't have volume profiles and then draw a volume profile across this 4-day range just to get, all right, where's everybody priced in? Because people are kind of priced in up and down all over here, right? So if I look at this, when I draw it, we see the 70th percentile of where the volume is being transacted here and here. So that means within this range, the market is relatively balanced. Buyers and sellers are agreeing on price in this range. So, you know, we've had some quick elevator down drops. A lot of that's been also on headlines. That's another complication to this market right now is with the stuff going on with US and Iran right now. So anytime any headlines come out around that, the market's very sensitive to it. And we see these tape bombs where the market just plunges kind of unpredictably. And so that Every time that's happened though, we've failed to sustain at the extremes. You can see the wicks at the extremes. Again, this is a 4-hour chart looking at the last few days with a volume profile drawn over this range. Does that make sense? So we can see the lack of acceptance outside of this range anytime we've tried to get out of it. And we have continued to mean revert. Now we do see how the volume has shifted higher, and we see the point of control up here near the high. So that is a good sign for bulls. Bulls are continuing to push higher and build value higher. Now, another thing coinciding with that is the fact that NQ is so much relatively stronger, which is just because they're weighted in different sectors a little differently, right? So there's some sectors within NQ, within the NASDAQ, that are obviously stronger. So generally speaking, coming into a day like this, where we have a balance range, I first always look for failed extremes to take a fade against that and target the middle of the range. That's a classic balance range setup, and you can put it on crack by analyzing the order flow to get really precise entries. You can realize really high risk versus reward multiples, even with a small kind of scalp on this range. Now, in this example, this is a pretty big range, right? Because it's a multi-day, right? So we can see that forming. And the reason is this just happens when the market goes into a balance area like this. This happens many times before we get a true breakout. And you can just see how many times: 1, 2, 3, 4, 5, 6, 7, 8, right? 8 times now we've tried to break the extremes of this value area and reverted back in. Right, so imagine trying to catch a breakout every time. Breakout, no. Breakout, no. Breakout, no. Breakout, no. No. Back to the middle. Right. So when I see that going on, I typically just stay patient for the extremes, and I wait to see if the only time I'll wait to shift that is once structure is really broken with strong volume and then holds outside of that, right? And so oftentimes, I'll miss, if we just blast out of it and we just fall one direction or the other, I'll just miss that. But I've already capitalized typically multiple times on the mean reversion. That's very readable. There's clear technical ranges here. That's an easy base hit, right? And sometimes if there's a news-driven headline that breaks us out of this balance, it can be hard to catch because it just goes. Now, if we get a nice technical like break and retest, what I'll often look for is like a strong surge of volume. This is actually green and I'm at the lows here, so this should be red. So I'll look for a strong surge of volume, and oftentimes we'll see like a low volume node on the break of that and then hold a retest in that to know, there's a good probability we're truly breaking out of this range now. So until that happens, right, it's kind of like guilty until proven innocent until proven, whatever it is. Until the market proves to me we're going to get out of this range, I'm not going to try to speculate that it is. Now, the only caveat that I would say here is this is at all-time highs, and so it's a dangerous business trying to fade the highs, because many times we can go into short-term ranges like this and then continue higher, right? So we have a very clearly defined range now. However, just want to put that caveat there. We're trading at all-time highs. So that's pretty much my game plan today, is to be very, very patient. Like I said, I've kind of already gone on a streak this week. I'm kind of chilling here this morning. I want to see what happens if we come to the extremes of this range. I pretty much don't want to hurt myself inside this, especially if it's choppy on a Friday. If you look at the other thing, this was last Friday. Here to here was last Friday. This entire week going into Friday now has traded like completely within last Friday's range. So we've spent this entire week just trading inside last Friday's range. Now, we did this morning in the pre-market just barely break up the highs of that. We just peaked over the highs, but it's not even like mean anything to me because we just dropped right back into the range. Make sure you stay tuned, ask good questions, participate in the chat, and we will be selecting members from here to be selected for the giveaways. And also make sure you're over in the Chart Fanatics Discord if you want to get some good resources, but also be able to claim those giveaways that you could win here. We have 10 a.m. news, Michigan, what is it? Michigan consumer sentiment, consumer confidence. One sec. Yeah, Michigan consumer sentiment, consumer expectations news at 10 a.m., which can spark a little volatility. All right, so now let's take a quick look. It's pretty similar picture on NQ with the exception that it's definitely broken out and it's been relatively stronger. So I took a nice long on NQ yesterday just because, like I said, the relative strength was clearly easy to read on NQ. But so ES is basically trading in this range down here relatively, and we can see we've strongly broken out. We did have this tape bomb here that occurred, and then we just immediately V-shaped back and back into all-time highs, which is interesting. Typically in all-time highs, I do like to wait for those kind of impulsive panic pullbacks where everybody's like, this is the top, let's go short. No, it's not, bro. We're buying the dip, right? So I typically like to wait for key levels of volume nodes or key support and resistance. I like to see a kind of a fake out impulsive pullback to look for longs, and then just use the momentum into the new highs as the target. A lot of people look at all-time highs and they either try to short it at the all-time highs to catch the ultimate top, or they chase it long. And both of those things are a recipe for just a million paper cuts, death by a million paper cuts, in my experience. So what I like to do in all-time high conditions is just to wait for the really impulsive, larger pullbacks, look for large absorption, and then long that, and then use the momentum into the all-time highs as the target to take profit. That's generally what I like to do. Because I've just found a lot of times when we're trading higher, people are trying to catch the breakout, and it's like breakout, pullback, stop, breakout, pullback, stop, right? And then people that try to fade it are like, oh, this is a top, nope, stop that way too, right? So typically what works best for me when we're trading at all-time highs like this is to wait for an area where the market gets a little exhausted, impulsive pullback induces a lot of people to be like, this is it, we're reversing, let's short, right? Nope, absorbed back to all-time highs. So that's kind of my preferred scenario in these kind of conditions, until proven otherwise. How do you discern between a pullback or a trap before making your entries? I don't know, I just YOLO it. No, just kidding. I look for key technical areas. Obviously, if key structure shifts, like if there's a high volume area where the market is consolidated and then rallied from, and then we break down from there and we shift structure substantially, especially on like a 4-hour time frame or a daily time frame, then I'll start paying more attention to that. But until then, I'm just going to continue to look for key areas to buy the dip, because that's just going to play over and over again. The market will rally and do that longer than you expect most of the time. Rallies tend to be more frequent and go for much longer than pullbacks. And if you just look at a yearly chart, if you look at a yearly percentage breakdown on the S&P, you'll see that, wow, it's a lot more green than it is red, right? So the market stays rallying and stays uptrending for a whole lot longer and a whole lot more often than it pulls back. So, oh yeah, we were going to talk about NQ analysis. I got to finish going through this. Yeah, so pretty much the same thing here on NQ. We have this value area highlighted in yellow. That's the 70th percentile, but I really like this area specifically. You can see just that's where the real peak of volume is around the point of control. And this is kind of filled in now, but there's a bit of a low volume node here that was holding really well, right? I actually yesterday morning took this long here, and then we broke the high, some new came out and stuff, and we dropped quickly. I was already out at that point. I already hit my take profit, and then I was done trading. But since then, that once again got absorbed, failed, and back up. So I'm kind of watching the same thing here. This area, right? Because we're having relative strength here on NQ. So if we kind of hold this zone on a pullback, I'd be interested in that. If we don't, and we break back into this value area, if we recapture back in this value area and ES breaks under that consolidation that it's in, because ES is a lot more sideways, remember, then that would be a more major sign of weakness that we could kind of have a mean reversion Friday, which meaning mean reversion on this kind of uptrend that went on for like a crazy 14-15 days something. So I need plus confirmations for that though, right? I'm not going to be a first short up here at all-time highs. I want to see that. I want to see real proof of that, not guessing. Now, not to say if we see a short-term structure form up here and I just see really clear confirmations to scalp it short, maybe I will just for a quick base hit, right, on the order flow. But that's counter trend. That's more advanced. Just understand with your position sizing and your targets. If you're playing a counter trend scalp, understand the differences and how you need to manage that and execute that. Would you long NQ right now? No, it's a little too high for me. I'd rather see a pullback. Like I said, I'm already on a hot streak this week, coming into a Friday. If there's an A+ set opportunity, I'll be in, but I'm not trying to just do anything dumb here. We did have a pretty explosive move back here off 7 a.m. What was this? And there's some big bids down here. So this is kind of the first area just above this prior consolidation that I'd watch here around 27 150s. Looking at my chart, yeah, this is above that. So yeah, if we retrace this low volume tail back to like around 27 150s, 27 085s, then I might be interested, which is this area here. We see this dark red spot here. There's a lot of orders, so other people are thinking the same thing, or at least they're placing orders here. That would be an area of interest. Definitely want to let this first 5 to 15 minutes develop. I always like to let at least the first 5 minutes, ideally like the first 15 minutes, develop. And the reason is, guys, there's just such a surge of orders around that time frame that it makes just a little bit too much noise to have a really good read, right? Similar to like trading like right at high impact news. Whoa, heads up. Good grief. Let's squish this in a little bit. So a little drop off the open here. Where's ES hanging out at? Any questions on that though? Let me check out the chat. Funny how you just pointing out what the point of control really is. I never really paid attention till now. It's important. Thanks. Yeah. Glad that helped you understand things a little better. A lot of aggressive selling right here. Could just be some profit taking on a Friday. Again, the market's pretty high. NQ just peaked at to all-time highs again, right? So going into the weekend, you know, maybe a lot of people that have been long are thinking now this morning is a good time to go ahead and take profit before the weekend. There's a lot of potential risk around escalations with Iran and the US. So wouldn't be all that surprising to see a profit-taking Friday. What type of risk versus reward are you taking? Let's see here. Generally, at least 2 to 1 is the minimum for me to take a trade. For this current month right now, my average risk versus reward is a little over 5, a little over 40% win rate. So for me, generally speaking, like my minimum goal is to kind of be at least 2 to 1 risk versus reward for a trade setup. Otherwise, I'm not even interested. I would say on average between 2 and 4 are for a lot of my trades. In your experience, what is the signals most? Hang on. This is a good question, Slayer. Let me think for a second. So Slayer said, in your experience, what is the single most common mistake traders make when interpreting delta, so the difference between aggressive buyers and sellers? And what's the one habit you cultivated that gave you the biggest edge in reading the tape correctly? So this is a good question. Let's talk about it while we let this first few minutes develop here. Just draw a blank snip here so we can talk about it. So there's a concept that I like, again, from studies in tape reading, that talks about an arrow, the business end of an arrow versus the feather end of an arrow. And so what that means is the business end of the arrow is showing us where the aggressive participants that are in control and driving price, right? So you would see large aggressive delta driving price and momentum in that direction. And the feather end of the arrow is the weaker participants, right? In this instance, if the market is rallying, this would be aggressive sellers. So on the simplest way to describe this would be if there's increasing volume of aggressive delta as the market's rallying, right? So say if these are bookmap bubbles of delta, we're seeing increasing delta like that of aggressive buyers stepping in. And it doesn't always work out perfectly like this. There's nuance, right? But I'm just saying in general. And then we see kind of small decreasing delta of pullbacks, right? This is a healthy, strong uptrend where aggressive delta from buyers are in control of price movement. And we can kind of see that on these bubbles here right now. See how price drives up, larger bubbles? See how price pulls back, smaller red bubbles. Larger aggressive buying, smaller weak selling. Larger aggressive buying, smaller weak selling. You see that right now? It doesn't always work like that because there is, large passive participants can kind of act like guardrails to price where they absorb one way or another. And so this is the next concept that I'm going to talk about here. And when I'm building to something, and I'm going to tell you the mistake that people make with order flow and tape reading, because they may see something, they think they know something, and then they get hurt. And I'm going to tell you why. So keep this in mind. Now, what we look for as far as absorption for reversals, sometimes the market may rally to a level. Say this is like a resistance level here. This is a supply zone, a resistance level, whatever, right? And we're seeing a rally into this level, large aggressive buying into this level. But this could act as absorption. And the absorption example I often talk about is like, imagine absorption is like a sponge, right? So imagine the aggressive participants that are driving price movement are like a dripping faucet, and the passive participants with resting orders, so like offers, passive sellers, are acting like a sponge. Now, if these aggressive buyers get exhausted and there's enough passive sellers, the sponge is big enough to absorb all of it, then the market might aggressively reverse from here. And that's what you get, a supply zone reversal, right? It doesn't always happen because sometimes the aggressive buying does not get exhausted. It fills everyone willing to sell and blasts and keeps rallying, right? So that's why it's important to read the order flow in real time to know whether a supply or demand zone is actually holding, to know whether a support and resistance level is actually holding or not. So now a mistake is some people, when you are newer with order flow and you start learning about absorption reversals, right? You'll start trying to look for absorption reversals anywhere where it's not necessarily a key spot and the market is just rallying. And really what's happening is aggressive participants are driving price higher, and they may see one subtle instance where we have like a little double top and you think you see absorption, but really overall the market is uptrending. This is not a good time to look for an absorption reversal. There's no key context, location, anything. You're just thinking you see absorption, trying to short it. We get a little pullback and then you get blasted to the face. So over analyzing, tape reading, and order flow at non-key locations, thinking you see absorption all over the place, and trying to fade and go against momentum, when really what's happening is the arrow, right? So you need to learn key context and locations of when to look for an absorption reversal versus, no, this is not an absorption reversal. This is an arrow with weak buyers and strong, or weak sellers and strong buyers, and we are continuing to push highs. So there are subtle differences that you have to learn, and a lot of it comes down to context and locations. And that's why I love to look at volume profiles to analyze the overall market auction. If you don't know about auction market theory, YouTube it. I'm going to be releasing a series on YouTube going super in depth on all this stuff. So if you guys are not already on my YouTube channel, make sure you subscribe on there, because I will be putting out a series going in depth on a whole order flow trading series coming out soon. Does that answer your question, Slayer? And congratulations, by the way, on winning the TradeZella subscription. Make sure you head over to the Chart Fanatics Discord to go ahead and claim that. My YouTube channel is in the description of this video. It's just Matt Owen Trades, and or you can search it. Watch out for fakes. There's a million fake accounts of me now everywhere. It's exhausting. The scammers are working really hard right now. All right, let's take a look at ES. So still relative strength on NQ. Even just looking at zoomed out on Bookmap here, you can just see the relative strength on NQ. So one of two things, right? Either ES finally plays ball and gets out of this bounce range back to the upside, and then NQ and ES are really, so the biggest thing holding NQ back right now, in my opinion, is that ES is just not participating in this rally. The best, strongest, most continuous trending directional moves or imbalances occur when both indices are NYM, but both major indices, ES and NQ, are both making an imbalanced directional move. If not, if one is and one's not, that's when you're gonna get lackluster continuation, kind of mixed sectors, and so mean reversions could continue to play. ES is currently kind of just in a don't touch it zone for me. Like I said, in the middle of that range. I like the relative strength on NQ. If it holds, it would be better confluence and confirmation if ES can start showing some strength and stop sucking. How do you calculate your risk versus reward? Is it per trade? Yes, every trade I take, before I take it, I have a stop loss. That is in my stop loss is the area that would invalidate the confirmation that I'm looking at on the order flow. So I see confirmations on order flow to take my entry on a trade. Now above or below that, where that confirmation is invalid, is my stop loss. My target is either an opposing high or low, opposing support and resistance level, maybe, you know, VWAP, value area, something. I have some kind of technical reason of why I think the market is going to draw to a target. And in the moment of execution, if that's not at least a 2-to-1, two times risk versus reward, 2 times reward, 1 times risk, then I'm not taking the trade. Ideally, I like to be even better than that. I really like to be 3 or 4, but I'm saying I won't even consider a trade if it's not even at least 2-to-1. If volatility is lower, we're in smaller ranges, etc., 2-to-1s are that. But volatility has generally been higher. I generally like to be living in the 3 to 4 R range. What is your favorite pastime when you are tilting? Confused. Tilting should not be in your vocabulary as a professional trader. You got to be you got to build discipline over time. Even to this day, I still have broker limits set that I cannot exceed. So like my average risk for a day is 3 losing trades of my average position size. And if that's hit, I'm locking out. How do you handle sequences of losses without deviating from your model? That's a good question. That's a good question. You just have to, there's truthfully no like magic answer. You just have to get to the point of experience where you just know for yourself and you just understand outcome independence. Every trade has a probability outcome. Even your most A+ trade setups with all the A+ confirmations sometimes don't work because this is just a probabilities game, right? So to me, let me give you an analogy. To me, a trade setup is like a dice game. So say every trade setup I have is like this dice game is if I roll even, I win 2R. If I roll odd, I lose 1R. That's the game, right? And so I know a 6-sided dice, the chances are 50-50, right? That's a profitable edge over time with that set of criteria that is that trade setup. That will be profitable. However, go roll a dice 100 times and you're going to see plenty of instances, just how probabilities work, where it seems like you roll 5 times in a row, even or odd, right? And it just happens sometimes, right? So the more you understand that and the more you are playing this game over time, you learn to accept that and stop trying to control the outcome every day. Because ultimately, like trying to control your destiny every day in the short term will destroy you, because it's an unreasonable expectation. Nobody can do that. So Over time, you learn to just accept the probabilities game for what it is and stay consistent with it. And it is difficult. It's especially difficult when you haven't got to the point where you're consistently profitable for months, you are making payouts and stuff like that. Because at that point, you have like the vision of, if I just stay consistent with this thing, with this setup that it has an edge, right, that I've proofed, then the short-term ups and downs, it's fine. But when you don't have that, it's like you're fighting for survival every day because you don't really have confidence in that. And then, so that is tough. And that's a phase you have to get over in trading as you get better and better. And really, you just have to come to the internal self-awareness, just of outcome independence, that every trade is unique. It's a probabilities game. There's going to be strings of wins and losses. So you don't get too high when you have a string of wins like I've had this week. You don't get too low when you have a string of losses. It just is what it is. Now, there's a difference between good losses and bad losses. If these are good losses and you're playing your setup, you're managing your risk, you're doing everything right, but the dice just rolled against you a few times in a row, that's fine. That's a big difference between taking bad trades that are avoidable losses, unforced errors, where you're making mistakes that setup was not in your game plan. You took a random revenge or FOMO trade, and then that led to one thing to another, right? That's a whole nother issue. And that hurts you mentally and technically, right? Because technically, then it's hard for you to track what your edge actually is, because you've got a bunch of random BS in your data set. And then 2, it puts you in a bad place mentally where, you're constantly feeling like you're fighting for survival. So you're like, go green or blow up trying every day. And that's a bad place to be. Makes sense. Bookmap question. Your bubbles used to be filled with both red and green, meaning both buyers and sellers. So on NQ, I use my bubbles like this now, which is showing me, these bubbles are showing me the total volume, and it's like a pie chart of the split between aggressive sellers and aggressive buyers. The reason I like this is because I often zoom out more on NQ, and so I can see a nice visual of the difference between buyers and sellers in a range, even when I'm zoomed out. Because if I zoom out a lot like this, it will group so many orders together, and I just see a big red bubble or a big green bubble. And there's a big difference between, a big red bubble that's like 90% aggressive selling and a big red bubble that's like kind of 50-50. If that makes sense. 51-49. So, so I just like the visual here. I didn't always do this. I started doing this like a few months ago on NQ. I just kind of like this visual on NQ. On ES, I still have this. So this is just the cumulative delta one way or the other, green or red. And it's showing that visually with the size of the bubble. So I get a little bit more specific and granular information with this, which is the total volume indicated by the size of the bubble and the split between aggressive buyers and sellers in the pie chart of the bubble. And the best way I can explain it is it just helps me read things visually, even zoomed out a little bit more on NQ, because NQ is so much more volatile. I do zoom out a lot more, and I do look things a lot more granularly. So when I look at things a lot more granularly on ES, like I can see just the total delta bubbles very clearly. On NQ, when I zoom out more, I just have a better informational view with the total volume bubbles. At least that's what I've found has been helpful for me. Yeah, you can adjust this heat map, guys. So you can, if you want less noise on the screen, you could adjust this heat map. And maybe it would be better to have it like this, because all the blue doesn't mean too much. The stuff that I really care about is the big orders, which are these darker red spots. And really, I only care about if that fills. It's important not to overanalyze stuff on the heat map unless it actually fills, because these are just passive orders that have been placed, and they don't, sometimes they pull, they're just spoofed. So it's most important to pay attention to orders on the heat map that show real intent, meaning they fill. So yeah, I have the heat map like this, guys. I don't know why, I kind of like it, but I'm really just paying more attention to the dark orange and yellow spots. All the blue doesn't mean too much to me. So we're coming closer to that area that I talked about, which is like 50 to 27,100-ish, which is that top of prior highs. I'll show you what that looks like on my candle chart over here. Just basic candle chart. You can see prior resistance, possibly turn support. You can see the aggressive buying as we broke through that. So just pure price action, we can obviously see this is a key spot. It also aligns with kind of the top of balance area on the volume profile. Now the top of balance area on the volume profile is a little lower, but that's the top of like this volume wick. So important area to pay attention to if we break under here or if we hold. Do you now use the DOM Pro on Bookmap? I have taken it off my screen. I have a DOM on Tradeovate, but to be honest with you guys, the biggest thing that I look at on the DOM is just delta. And I have other ways of seeing that, but I took it off my screen because one, I didn't necessarily need it a ton because I have similar information broken down on my footprint charts, which I have on another screen. And then the other reason was just for these live streams to give you guys a better full screen view of Bookmap. And I think most people weren't even looking at the DOM. ES is kind of holding up here in this range. Again, it's not really any kind of place that I really want to place a trade, but we see all that selling right around these 50s. It's been holding. This area around 71.50 to 55 has been an area I've been paying attention to the order flow a few times over the last few days. It's been a key spot a few times. Here's a good question. Matt Silverstein asked, can you explain what VWAP is and how you use it? So I don't really use any indicators at all or moving averages. The exception is a little bit of moving averages. So the moving averages that I use are VWAP, especially anchored VWAPs, anchored on specific trends or balance ranges. And that's the volume weighted average price. So kind of just the average, it's the average weighted price based on volume over that period, right? That is going to mainly what I look at for that is just kind of directional, kind of momentum, I guess you could say, kind of who's directionally like in control. So I don't use it necessarily. Sometimes it'll be like a target, and sometimes I will pay more attention to it because a lot of algos are tied to VWAP and moving averages like that. So sometimes there are important things. And I'll give you an example. Like, say you're a hedge fund, right? And or whatever, you're a big fund and you have instructions that you need to buy $1 billion of the S&P, right? And say, and it needs to be filled that day, right? And say the S&P is rallying that day, right? And so their execution algorithms and their traders at that fund are probably going to try to get the best price that they can, so they can show their bosses, they can show whoever, look, overall we average our position better than VWAP on the day, right? Because if they just dump that whole thing in, they're going to spike the market. So there's things like that. So it just shows you kind of a general idea of control in which direction the market is moving. Now, the other thing that I look at is the 20 EMA, and I have that tied to my footprint chart. So I'll show you my footprint chart here to show you what I'm talking about. For example, here's my footprint chart on ES right now on Tradevate. And you can see the green line is the 20 EMA tied to my footprint bars. And the blue line here is VWAP. And the 20 EMA is better at showing like near-term control, near-term intraday momentum. And so oftentimes, you'll see, shifts in control in the market like this when, we have a 20 EMA crossover VWAP, right? That's a lagging indicator, of course. It's always going to be behind, but I just have it as just a general visual. Again, I don't have any specific trade set up around that. Like, I'm waiting for this to cross over that to take an entry here. No, not like that. It's just a general thing that I like to have for a visual of kind of where the market is at, where the auction is at. Obviously, if we get too extended away from VWAP or 20 EMA into a major area of support or resistance, we could mean revert towards VWAP or the 20 EMA. So sometimes in those instances, 20 EMA or VWAP maybe become a target, right? If I'm looking at kind of an ORB type setup, a momentum setup, a break and retest type setup, I would love to see the 20 EMA holding above or below VWAP with the direction that I'm trading. And I would like even better if we pull back to it and I'm seeing some kind of like algo type orders hitting around it, fast orders hitting around it like that, then that's even more like confirmations and things like that. So it's just a general context thing for me. It's not here's my specific trading strategy set up around that indicator, if that makes sense. Sierra chart or Tradevate. I've been using Tradevate for longer. I've been using Tradevate for years, since like 2020 or so. And it's had its ups and downs of reliability. I've traded, my personal accounts and everything. It's been mostly good. And I still use it obviously today. Sierra chart I've been using for a few years as well. I will say it's not beginner friendly. It's very complicated to set up and not easy at all. But it's definitely more reliable, more robust. Their Denali order routing, Denali data, whatever their order routing is super fast. I rarely get slipped a tick on there. So it's definitely a more professional platform. It's got advantages. It's super reliable. It's super robust. It's super customizable. It's just not user friendly at all. Tradevate is much more beginner friendly and easy to set up. And it's got the essentials that I need on there for basically what I use it for, which is volume profiles and footprint charts. I've also started testing with deep charts and it's working really good. So that's a great all-in-one platform as well. Again, I have no affiliation at all whatsoever with any of these. I'm just giving you guys information as far as what I use. And so that deep chart as well has a pretty good chart for volume profiles, footprint charts, all that kind of stuff, all in one, bubbles, etc. So all of those are good. I would say Sierra chart though is not beginner friendly and not easy to use. So we kind of broke under this zone where we saw kind of all this support holding, and now retested it. That also, interestingly, aligns with that VWAP and 20 EMA. So you can see here a couple confluences lining up right now, which is one, we saw here on Bookmap how this area was reacting. And then, by the way, the difference with VWAP here, this is an anchored VWAP and this is a regular VWAP. See this peak in volume that's transacted here. And now we see the EMA and VWAP also holding here, right? So this is an interesting piece of context developing. Another thing that I've been telling people all the time recently is no matter how good we are at reading the tape, reading the order flow, like technical analysis, all that kind of stuff, one headline comes out in these markets and all that crap goes out the window, right? So be very mindful of that. Ableist mate asked a good question. What market conditions, trend, range, expansion do you trade best and worst in? I trade balance ranges really well. It's very clearly defined, really easy to read for me. Fake outs work really well on that. And I also, am very good at trending directional moves, to be honest with you. I have different setups for both, and it took me a long time to get good at that. And part of it is I only really trade one or two instruments. So I'm like a master at ES and NQ. So I have more setups for different market conditions on those instruments. So you can either be someone that kind of specializes in one particular setup and have a lot of different instruments that you traded on, or you have a handful of different setups for different conditions and you have one or two instruments that you really master. I'm kind of the latter. But that being said, probably the conditions that I'm worst in is when the market kind of like breaks out and just kind of goes in one direction, not really any retracements. There's been many of my worst trading days has been like when I try to find a reversal, kind of like what I talked about with you guys earlier, trying to spot an absorption reversal against a strong directional move. So many times when the market just kind of blasts like gamma squeezes in one direction and see absorption fail, and we just trade one direction, that's when I take paper cut, max on loss on the day. And a lot of times when I see days like that developing, if I'm not already positioning it early, I'll just let it go. Like it doesn't matter to me. I'll just not trade. Look at NQ. Yeah, I'm watching both on different screens here. Oh yeah, we did come down to that 50 area. So this is looking a little more interesting here in NQ. We see these larger orders here on the heat map. Kind of missed that while I was talking. It came down to these 50s. So see the surge of negative delta into these. See how we had a surge of negative delta? See these volume bars down here? But price didn't go any lower. So there was a lot of passive buyers here. Soaked those up and we bounced off there. Now I do like this on the heat map, how more passive buyers are stepping in at this 50 level again. So you can see how we absorbed these sellers in this range here. Talking about this right here. And then rallied aggressively off of it. And then there's more passive buyers stacking up here. So I kind of like that. So I'm gonna kind of watch that zone if we do dip back in there. And I was a little late here, but you see it already held 2 pullbacks into there. If ES also recaptures this 20 EMA and VWAP, this would be a good context piece that NQ is going to blast. Could be. It could fail and it could reverse and we could smash lower. That's nothing's 100%. So similarly, I'll show you guys how this looks on the NQ footprint chart. And this is an exact thing I use for a lot of trades, guys. So pay attention to this one. This is an exact thing that I use for a lot of trades. Not saying I would in this instance, it was maybe a little too early, but that same thing we saw right here is we saw a lot of aggressive delta come down into that range. And then look what that, there was a lot of selling right there at the low that got absorbed. You can see the cumulative delta flip on those tick ranges, and then price exploded higher from there. And you can see this little wick on the footprint chart showing the aggression and speed of buyers and this full body of aggressive buying after that. So that is a key area to watch on a pullback. We just barely pulled back into that area there. But it's kind of this, so this zone that I just marked here on Bookmap is exactly the same as that area that I just showed you on the footprint chart. 2 different ways of viewing it. 2 different ways of viewing it. And essentially what that showed us, at least in the moment, is absorbed sellers and aggressive buying stepping in, trapping them. Alan said that zone is a fair value gap. Well, this is how I know it's one to pay attention to versus one that doesn't mean anything, at least for me. If you have a good thing with the fair value gaps and ICT stuff, then rock on. I'm not saying you can't be good with that. Not every time a fair value gap forms on a candle chart is it something that I would pay attention to based on the order flow and volume. Might have missed this one, guys. I was kind of talking a lot. Pascal said, I've been in a lot of order flow discords, but I'm learning a lot from you. It's awesome, man. Well, darn it, guys. I might have missed this one. This was the level that I called out, that 150 area, and I was sitting there blabbing to you guys about how to trade it, and then I missed the pullback into the zone myself. Can't chase it now, but so this is exactly the thing that I would look for, though, is this absorption followed by the aggressive buying, and then one of these pullbacks in there to take it long. So in this model, I like to long one of these pullbacks and have a stop just under here. And in this case, I'd probably at least first just be targeting these prior highs right up here where we're trading now. And you can see how visually here, just looking at that, let me do an ellipse here. So you can see that that square of this entry zone that I talked about versus that. You can see the risk versus reward there up to these highs. It's exactly what I trade all the time. Nice, Jarius. Hopefully you got some wins. Do I ever trade without order flow? Not even a little bit. I feel kind of blind. I mean, I could probably trade reasonably well with price action, just making assumptions based on the order flow, you know, looking at a lower time frame candle chart, just because I have a lot of experience. If I have at least a volume profile or something, then I could probably trade reasonably well, but why would I? Like, I can just see with high confidence on the order flow. And I've been trading with this, you know, for years now, before it was a cool thing on the internet. Nice. Congratulations, Blessed. You've won the Apex Trader Funding Challenge. Check out the link there. Well, guys, I think I missed the setup today. That was the one. I called it from the pre-market game plan. If we got that pullback there into that 27,150 area, we did. We got those confirmations that I showed you. That's like one of my A+ models there. You guys go back and rewatch that explanation there. I just handed you an ATM, but I missed it because I was talking. So Capital Preservation Friday. I'm not chasing it now. It is what it is. Yep. I mean, look at the reaction off that now. Amazing. So we had a good quality level, which was prior day highs. We could see how it was prior resistance turned support. The big thing, though, is let's talk about volume, right? Because volume is what matters. Not every prior day high matters. Not every fair value gap matters, right? What does the volume show us? This is why I was watching that zone, because of volume, not because of a candle chart pattern, right? This is that area around 27,150 that I called out. Again, I missed it like a ding dong because I was talking to you guys. So on the break of prior day highs, look at the volume. Anybody in the chat, let me know what that is right there. Yeah, I wrote it. Good job, guys. Low volume node. So we have aggressive buying breaking those highs, like I talked about, leaving an area of low volume because they were very aggressive in shifting control. That's why I said there's relative strength on NQ. If we pull back there, that's why I was watching to go long there. And unfortunately, you know, I missed it this time. I wasn't paying attention at the right moment. That's okay. So we pulled back there, we held. Again, on a scalp like this, especially on a Friday, my first target is just like prior highs, right? So this has worked well for me, is to use these key kind of higher time frame levels, take it for a high risk versus reward, scalp just right into prior highs, bam. This may keep going all the way up there and maybe you hold runners, but for me, the point of control is here. So that's an area to target. These prior candle highs are there, that's a good target. And even with that kind of base hit, you're talking easy 4-to-1, 5-to-1, easy. So again, that
is why this was a key important spot, not because of a candle chart pattern. Because if you're looking at just the candle chart patterns, it may or may not be a key spot. Who knows? Does price and volume confirm it on the order flow and stuff, right? And then we look at the order flow, and in real time see, big passive buyers absorb these guys. Look at all this negative delta into that low volume node. Did not break it down. It held, right? So that's step one. Then we see aggressive buying rallying out of there. That's step two. Now look at the pullbacks into here. Look at the red bubbles here versus here. So remember going back to what I talked about earlier in this session about reading the arrow, the direction of the arrow. So in this instance, the arrow flipped, right? We were coming down here, aggressive selling into this low, but then it halted, absorbed. And then the arrow flipped, aggressive buying coming in, and then the feather end of the arrow with weaker selling on the pullbacks. Make sense? But this is most important at a key area of the auction, like a low volume node where we broke out prior day highs. Not in the middle of nowhere. All right, guys. Hopefully you learned something today. No trades for me. That's okay. I missed this one. It's all good. Hopefully you guys caught it. Hopefully you learned something. I just handed you an ATM machine. Go back and rewatch this if you want to learn that setup. And make sure you subscribe to Chart Academy. That's coming out. That's going to be a wrap for me. Today's my son's birthday anyway, so I'm going to go take him to Disney. Hope you guys have a great day and a great weekend. Congratulations to our winners today. Again, I think this was a great lesson. Great questions in the chat today. Thanks everyone for tuning in. If you miss a setup, don't chase it, don't fade it, don't revenge trade. Wait for the next A+ opportunity. And I will see you guys next Friday here on Chart Fanatics. So have a great weekend. Thanks everyone. Peace.